All right, so that news about the Biden-era merger rules potentially staying in place and more than likely staying in place, that happened earlier in the week. Why do you think we saw a reaction later in the week?
Yeah, that announcement really didn't surprise us talking internally. Strong bank merger rules have always been, something we need in the system. We need strong regulation. The banks have had a decent move since the election. So, one day's move to us isn't a trend. But, we are keeping a close eye on the developments from Washington.
Okay, so you're keeping a close eye on developments from Washington. But I want to ask you, when we're talking about investing in the financial space, even with these Biden-era rules in place or, potentially staying in place for a longer term, does that change the thesis when it comes to financials? I mean, how important were mergers to the financial sector? It seemed like the stock's really moving higher on more capital markets activity, more investment banking activity. Were mergers a catalyst for some of these upside moves?
Mergers are a big thesis within the banks, and that goes back historically. I'm 44. When I was born, there were 15,000 banks in the country. There's 4,500 today. So I would say M&A is a cyclical and a structural part of in investing in bank stocks. On average, you lose about 3 to 4% of banks every year to consolidation. The last couple of years, Frank, have been slower, right? We've seen the effects of higher interest rates, uncertainty around the election. And there's been a huge amount of pent-up enthusiasm after the 2024 election. Now, deals take time to occur. We were last week in Florida meeting with over 100 banks at KBW's annual financial services conference. The momentum and the dialogue there was just really encouraging. But these things, they do take some time to occur.
All right, we're very focused on these merger rules and the idea of regulation. But I want to ask you about something else. The Fed impact on the sector, because yesterday we heard from Adriana Kugler, a FOMC official. She said that she believes rates should stay in the same place for quite a while. We've heard other Fed officials say something similar. So are we sure this isn't a potential Fed impact on the sector, at least for this week, as opposed to the idea of these merger rules?
I think there's a lot of factors in play. Higher for longer. We are getting used to higher for longer. We've had higher interest rates for a couple of years. Corporate borrowers are now accustomed to the resets that are happening. And as a firm, we think there'll be 2 cuts this year. Whether we get 1 or 2. What's interesting, Frank, coming out of fourth quarter earnings, when these banks laid out 2025 guidance, the range of outcomes was much narrower this year, which has a really important and profound impact on earnings estimates. Last year, going into 2024, the range of outcomes for the Fed were 0 to 7 cuts. And we saw a huge volatility in earnings estimates last year. We haven't seen that this year. And I think if we get stabilizing earnings estimates or even increasing earnings estimates, you could see the banks continue to work.